Breaking deal by Facebook, aren't we?
Yeah, Facebook has acquired the mobile messaging service WhatsApp for a staggering $19 billion. That is by far its largest purchase to date. Now, the deal includes about $4 billion worth of cash, the rest coming in stock and shares. Delano D'Souza has the details.
It's the largest ever price tag for a tech startup. Facebook will buy the fast-growing messaging service WhatsApp for $19 billion, giving the company a much-needed boost in mobile messaging. The cross-platform app allows users to exchange messages without paying telecom charges. Facebook has witnessed slowing growth in recent months. The deal will give the company access to younger users who value instant communication. Silicon Valley-based WhatsApp has 450 million users. The company claims each day it adds a million more. A user base Facebook's founder is looking to tap.
WhatsApp is on a path to connect 1 billion people. The services that reach that milestone are all incredibly valuable.
In 2012, Facebook failed in its $3 billion bid to acquire Snapchat, another mobile messenger. But the company was successful in taking over photo-sharing service Instagram for $1 billion. According to analysts, the hefty price tag for WhatsApp is an admission by Facebook that it can't replicate internally what other newer networks are doing. They say investors should consider that this acquisition won't be Facebook's last. WhatsApp will continue to operate independently for now. The company says it will stick to its policy of no advertising.
Let's move on and take a look at the markets now. They have just opened here in Europe, trending down for the most part. We've seen the French aeronautics giant Safran slumping nearly 3% in the early moments of trading, despite reporting a 22% increase in its net profit last year. Markets here following on from a pretty bad performance in Asia, which was affected by some weak economic data there. Major Asian indices all closing in the red. The Nikkei in Japan closing down 2%. Fresh data from Japan there showing that it suffered a record trade deficit in January, over $27 billion. That, as a weak yen made imports more expensive. It marked the third straight month of slower export growth there. And in China, a key index of manufacturing has fallen to its lowest level in 7 months. HSBC's flash PMI, or Purchasing Managers Index, fell to 48.3. That means that activity in China's factories is slumping, and it has reinforced concerns about a possible slowdown of the world's second largest economy.
We're going to shift now to something a little bit different. The Panama Canal expansion work is due to restart later today, isn't it?
Yeah, it had been stalled or halted for about 2 weeks. This amid a concern, a fight, really, about a massive cost overrun. Now, the administrator of the canal says that the construction will begin again this Thursday, thanks to an interim agreement with the companies that are supposed to be expanding it. The European Consortium of Contractors has said that the expansion project will cost $1.6 billion more than it originally predicted, and it wants Panama to pay for it. The work to widen that canal was due to be finished to mark its 100th anniversary this year, but it's now expected to be completed sometime around December 2015.
Now, Kate's going to take us through some of the day's other business news, starting with a major transatlantic deal. This is for Air France KLM.
Yeah, it's investing $100 million in the Brazilian airline Gol, looking to take advantage of a probable surge in travel demand as Brazil prepares to host the World Cup this summer and the Olympics in 2016. Air France KLM is trying to turn itself around with a new cost-cutting plan. Europe's biggest airline reported that while its revenue was unchanged last year, its earnings before tax rose by about a third to over 1.8 billion euros. Its net losses widened to almost the same amount, though, because of a tax charge and a fine.
The French food giant Danone has reported its first annual earnings decline in more than a decade. This following a massive recall of the infant formula across Asia, which damaged sales there. The Paris-based company said its adjusted earnings fell 7.6% last year, though it does expect business to pick up again in 2014.
And Japan's Shiseido has signed a deal to sell 2 of its skincare brands to L'Oréal. The French cosmetics giant will take over Decléor and Carita for 230 million euros. Companies have been in exclusive talks for the transaction since last October.
Now, we all think, of course, that we're in the wrong job. Here is the proof. Back to Silicon Valley. We're going to finish there as well with a look at what big bosses of all those tech firms are actually earning.
It's certainly been enough to depress me. I don't know. Listen to these figures. According to a survey by Bloomberg, paychecks for big bosses in Silicon Valley vary between $20 and $85 million a year. Now, that includes base salary, bonus, and stock options. In total, some 22 executives in California's tech industry earn over $20 million a year. That's up from just 4 of them in 2007. Now, with President Obama trying to focus on income inequality in the U.S., it looks like Silicon Valley could replace Wall Street as the new poster child in that debate.
Yeah, it is depressing stuff, isn't it? All right, Kate, thank you very much. Kate Moody there doing a grand job filling in for Stephen today. Nick's here as well. He's filling in for Flo. Everyone's filling in for everyone apart from me. I'm being me. Of course, the International Paper